Well, hello everybody. Welcome to How to Identify Opportunities in the Stock Market. We sometimes ask ourselves, why are we missing out? I'm Joe, representing MaverickTrading.com, and let's get into it. So let's talk about the key points. Understand that you probably have been in some of these stocks just by active trading or kind of following along with whatever your portfolio's been doing, whether you are actively trading it or you're just in a fund. So it's the cutting through the noise that really has a big impact. Once these stocks start to get into the media, they become a lot volatile. The other part of this is analyzing the opportunities realistically. You might not have the ability to get into these trades, even though they will continue higher. Setting your goals first and what you can afford is a great place to start.
Attention! This video is for informational purposes only. Maverick Trading is a US-based prop firm that specializes in option and equity trading. If you want to become a professional trader for a firm that backs you with capital, apply now.
So let's talk about some of the common traps. Hype stocks, many traders fall into that trap, focusing solely on what's in the news. What this does is this can create impulsivity, fear of missing out. At that point, it might be too far gone. Now, I know that a lot of these trends can go a little further than you expect them to. I have no problem chasing hype and momentum. In fact, it's a big part of how we swing trade here at Maverick. But understand, if you exceed the limits of available capital or your margin, you might not be able to survive it because of the volatility. I'll get there in a second. Information overload is huge. With the social media being as big as it is and a lot of people following what they want to follow, there is a lot of, oh, geez, you missed out. You should have done that. It creates this intensity. This leads to that FOMO I was talking about earlier and some poor decisions, which undermines long-term success in the market. And that brings me to another point. The market noise. Volatility can scare people in and out of stocks quite a bit. And it depends on your outlook and expectations of how long you would want to be in these markets. When you have stocks in the range of $200 to $400, $500, when they have corrections, those corrections are large. Now, if you have a smaller account, this can hurt you. It can kind of wipe you out, especially when it comes to margin restrictions that you might have. The herd mentality. It's usually the sign of an intermittent top or a correction that's going to be coming. Understand that when these stocks correct, it looks like it's the end of the world. It doesn't mean it is, because a lot of times they can consolidate and move even higher from there. So being aware of these things can really help for new traders to understand they have to have the capital available to absorb this, and you have to have your ideal of how long you want to be in it. Let's get into analyzing true opportunities more realistically. So systematically building a data-driven approach can help you discover opportunities that are often overlooked. We're taking a look at the ABC stock for my example, meaning, oh, it's the leader, it's the greatest. However, if you pay attention more towards the sector or what the driver is when it comes to the sentiment of the markets overall, you can find other stocks that do the same thing that might not be as volatile and at lower cost. Now, you're not going to see those returns. You're not going to see the hype that's behind it. However, it could be a safer place or a better way to introduce yourself into this big current surge. This will reduce impulsivity and allows traders to focus on realistic expectations rather than specific stock hype. Hype is great, it's fun, but it's short-lived, especially because the majority probably can't survive it. So let's get into setting goals based on what you can afford. The first thing is, hey, most importantly, what do you want to do? Okay, I want to get into the next boom. However, it's easy to follow. By the time it gets upon us, folks, we will already know what it is. We need to figure out what you can do based on the goals and the capital that you have at the time. So we need to establish a repeatable process to where we can take a look at some of these outliers in that same sector, showing that same growth and strength that we can actually afford and survive based on your timeline and outlook. Now, folks, we use softwares like FinViz and TradingView here at Maverick. They seem to be the most popular. There are a lot out there, but the overall idea is to find something you're comfortable with and build it specifically to what you want to do. There are many hidden opportunities out there that you can find based on the scanning system you use that you build specifically for yourself. So in conclusion, guys, you got to build an outline. You got to have a plan first, your overall goal, your capital available, and your time frame. One of these things that I talk about, and this comes back to the cryptocurrencies. Everybody focuses on, wow, I should have bought this when it was $500, $1,000 a coin, and I could have sold it at 100,000. We see the extremes, but what we don't see is how long you are truly willing to sit in that, and your overall goal, and your capital available, and your time frame. A lot of traders, I should say the majority of us, do not have that amount of money to sit in Bitcoin and see those surges up in the volatile moves over the last decade to even survive a move up to that $100,000, $110,000 level. So let's be realistic. Create a system based on that plan. Who are you? What do you need? What are you expecting? Customize scanning based on that. I don't want to look for these $500 stocks, but can I find some stocks that are more affordable in that same sector that do the same thing, that are experiencing some of the same moves? Target specific sector for those opportunities. And I think the overall thing is probably quiet the noise. Building your own outline, knowing who you are and how you want to approach the market is key. But the largest mistakes when it comes to any trader, when it comes to the beginning trader to the savvy trader, is not being able to quiet that noise. Focus on your overall goal and be aware of reactionary volatility. Too often we form opinions. We have the woulda, shoulda, couldas, and a lot of that can lead down a bad road if you let it. Thanks for joining me, folks. I hope this helps, and we'll see you on the next one. Bye, everybody.
Maverick Trading releases daily videos on market commentary and potential trades. Check out our latest